Hey everybody, welcome back to another beautiful day in real estate. Today we have a little bit of information we're going to dive into. Mainly we're just going to do an overview of what is happening again and just a personal opinion of what I'm expecting over the next few months. SpaceX is supposed to IPO tomorrow. It's looking like, I hate to say it, but it looks like it's going to come up. It's going to rip at the opening bell, and by the end of the day it's going to be lower than it opened. I could be wrong, but there's way too much hype behind SpaceX right now, and we'll get into that in just a second. But let's touch interest rates. We'll keep moving along. Interest rates slightly down today, not very much, but slightly today. Main reason that it is because the 10-year bond kind of dropped a little bit yesterday. Not much news behind it. It's one of those things we're just going to touch on every day, and then we'll jump into oil right away. So WTI crude oil, this is the next one, and it is still bouncing off of that support right around the $88 a barrel. Why? Because what happened is this morning, last night, Trump came out and said a couple of things. Number one, threatens. This came out this morning, if I recall correctly, out early this morning. The United States will be hitting Iran, whose Navy, Air Force, radar, anti-aircraft, and all other forms of defense together with the most its offensive capability are gone. It's going to be very hard tonight. At some point in the not too distant future, we will be taking Karg Island and other oil infrastructure points and assume total control of the oil and gas markets, much like we have with Venezuela, which is working out brilliantly with both Venezuela and the United States of America. Thank you for your attention on this matter. So now they are essentially, what I was hearing and reading is that Iran took too long to make a deal, and now they're going to come in and take over all of their oil, all of their supply, and that is going to create a monopolization in oil even more than it is. The difference is the United States is just going to hold it. It's not going to be a couple of groups. Right now, the United States holds Venezuela, who has the biggest oil reserves, or did have the biggest oil reserves. Iran is one of the biggest oil producers, and if you take over that, then you have the managing perspective of one of the biggest producers in the world, and then the United States, of course, which has Texas, Alaska, and North Dakota, who has tons of oil. Oil is one of the most valuable commodities in the entire world. Gold and silver, of course, they're valuable, but gold is one of those things that keeps the cog moving, keeps machines moving, make sure cars are running, and make sure product is being made. It makes sure that there's heat in your house. There's oil plays a factor in a lot more than just a few items. So anyways, let's talk about that just a little bit here today. So oil prices, they're moving down slightly. With the announcement of potentially attacking Iran, it did find a little bit of support, as we kind of anticipated, at $88 a barrel. Why? Well, whenever there's a potential for more war, or a continuation of a conflict, the oil prices are going to price in that it's going to go up because it's going to cause restrictions, which is going to limit the amount of capacity, or they limit the amount of oil that will be available for purchase or for transportation. And with the Strait of Hormuz continuing to be closed down, we aren't seeing much positive news to say oil should be going down. When the war ends in Iran, which it inevitably will, when it does, oil prices will come down. But for now, the market really, the market's a very futuristic view, right? So not like months or weeks in advance, but days, hours. You can start to see the market move in one direction, typically right before news pops. It's not a very clear indicator, but typically you can, right? So yesterday we saw a little bit of green, and now we're kind of coming back into the red. Same concept on Brent crude oil. This is the spot Brent crude oil. But the oil prices are not moving significantly. They're both in a channel. This one's $100 to $92 a barrel. This one's $88 to $94 a barrel. And again, until we see a major move, otherwise, it's gonna kind of stay here. Let's see here. Let's draw. And we got much going on there. Not much going on there either as of right now. I mean, you could argue this is a bit of a flag, but it's not exactly perfect by any stretch of the means, right? I mean, you could argue slightly. Let's see. Let's do it this way. I mean, it's not exactly beautiful or perfect, but I mean, it is kind of there, right? So honestly, this could go up or down. Really, there's not really an in-between at this point. It could go up or down, which is kind of unique, right? So when it comes to trading, you're looking at probabilities. And I was looking off to my right there because I have my trading patterns ahead of me, or, right next to me just in case. But right now, there's not a whole lot going on that's really going to dictate whether the market's going to move one way or the other. And that's kind of a good place to be, honestly, just because that means we're not necessarily bullish, not necessarily bearish, and we'll find out more. We'll find out more as the next couple of weeks progress. But for right now, Trump says that he will take Carg Island and assume total control of the oil and gas markets. 90% of the oil from Iran comes from Carg Island, and this has been a topic of discussion for for a while. Actually, it was something they were talking about a few months ago, and then yeah, it's something they were talking about a couple weeks ago. Then they got the ceasefire. It was back in April, actually, a couple months ago now, and then that topic kind of fell off the table, kind of like 50-year mortgages, where it was brought up but never really implemented, right? Now they're bringing back up that conversation. I think that the United States was saying that they're trying to make a good deal, and you have Pete Hegseth and Trump coming out saying that they had an opportunity to make a great deal, a good deal, and now they aren't. So now we're going to use force to essentially take over. I mean, it's a bit of a bully mentality, right? I mean, you say, hey, you do what I want, or I will, or else, right? And it kind of seems we're at the or else perspective right now. So we'll have to keep moving forward on it to see what happens. I mean, over the next couple hours, next couple days, we'll see once. But again, the Strait of Hormuz is still closed. No oil is getting through. It's still a bit of a strangulation aspect of it. Reserves around the world are starting to deteriorate. That what I've learned when it comes to natural resource disasters, quote unquote, they'll typically shift right before they turn to like extreme warning signals, if that makes sense. So like, more than likely there's news articles of oil reserves being lower than they have been in years, but there still is some in there, right? Like there's still oil in there. So until we reach a point of like, hey, if we don't do something today, we have problems. That's how long it's going to drag out for, right? That's how politics work, because everybody's at basically a Mexican standoff right now. They're sitting there staring at each other like, who's going to break first? And when we break, whoever breaks first is essentially going to be the one who loses, right? Whether relative or not. But right now, it sounds like Iran essentially doesn't have many keys to the kingdom anymore. They're running short on passages to essentially not, because right now their capacity for oil is maxed right now, or pretty close. I know a couple weeks ago they said there was only a couple weeks away. We might be like 1 week away from reaching the max capacity without them starting to transport again. And for those of you that don't know, I think there was like 100 some ships a day going through the Strait of Hormuz down to zero, right? So millions of barrels of oil transporting, and now there's no longer any. I know that they moved some to a pipeline which transferred north from Iran, but it doesn't have the capacity as the Strait of Hormuz would. So right now it's kind of, like I said, a Mexican standoff. They're waiting to see who breaks first, and I think the United States has the upper hand as of now. But we'll have to pay attention, right? It's really unfortunate because, again, this stuff doesn't really. It's not really a decision that any of us really get to make. Somebody in a higher seat gets to make the decision, and then direct from there, which is it's kind of wild to think about, to be honest with you. One person gets to dictate how many people get to go and risk their lives for their country. I mean, whatever. It is what it is. It's not my world. I'm just trying to pay attention to it. But the next thing is PPI numbers came in slightly higher than expected, along with inflation came in higher yesterday, which means the market is not looking great as of right now. Typically, you see a market move in one direction or the other pretty significantly, but what I'm witnessing now is I'm seeing the S&P 500 is doing a very well-needed correction as of right now, and I mean the sell-off isn't small by any stretch of the means. It's a pretty big sell-off. Some traders are going to say that we needed the sell-off to essentially find a local bottom, which honestly could be the closest, could be right around that 6,900 range. There's not really much support in between. I mean, there's a slight support at 7,100, but more than likely we're going to bounce off 69 before we make our next move up in a positive manner. I don't know. Again, it's kind of uncharted territory for me. I've never thought so much about this until the last 3 months, and now I'm so into it that I almost feel like it's moving slower. Like it used to be like, oh my God, everything's moving so quick, but it's like paying attention to it every day. It just doesn't seem like it's as chaotic as it once was. But anyhow, so we talked about inflation, core inflation. Holy buckets. Oh, excuse me. The next thing is, PPI inflation surges to 6.5%, above expectations of 6.4, and the highest level since November 22. Core PPI inflation came in at 4.9, in line with the April's revised levels. PPI inflation is now at pandemic stimulus levels. Odds of rate hikes continue to rise. So now everybody's talking about rate hikes. If Kevin Warsh comes in next week, Wednesday is his first meeting. Will he raise rates? I do not think so. I really don't. I think this is going to be one of those things where it's going to be all hype, and then he's going to come out and say we're keeping interest rates where they're at as of right now. And then they are discussing that they are going to be changing the way that we view inflation. So they're basically restructuring how inflation works. And you'll notice in different administrations that they're going to change the way that they view certain things to make it look better, right? I mean, inflation is still moving up, but there's no doubt about that. Their argument is it moving up higher than what being reported, right? So we saw during COVID that they were saying, oh, inflation's only at 8 and 9%. I mean, we could all agree that that's bullshit, right? But the thing is they're going to change and use data to manipulate it so that the numbers on paper are correct, but they're going to pick and choose. So like when it comes to inflation, they pick and choose between different categories. And right now they pick, they can pick against energy and food supply and I don't know, housing or whatever, right? They have a multitude of baskets. They pick a portion of them, they clump them together and they say, oh, inflation's only up 4%. Only 4%, you guys. It's not even that bad. But in reality, a majority of those other categories are going to be in the 6, 7, 8% range. And more recently, I've been listening to more videos and more people talking about it, but inflation being the silent killer. The thing is that, I didn't even think about this either, but like we're getting ready to build our house this year. Our mortgage is basically going to double, right? Our wage went up over the last few years. From 2020 to now, I mean, our wage went up basically, quite a bit more than we were getting, but we still have the mortgage rate from 2020, 2022, I guess, the low 3% interest rate, right? So a lot of people are experiencing it right now where they are, and again, it's part of the inventory shortage, right? So we'll jump into that for a second. Inventory is still very, very low, especially in North Dakota. Other places, I'm sure it's changing, but it's because of affordability reasons and such. North Dakota is very strong, sturdy, and stable still. I mean, we're still seeing very minimal homes on the market. We're seeing a lot of people digging and building. Right now this year, I've gotten more inquiries on my to-be-built listings, so listings that I have posted that are set to be built, than any other year by a long shot, because there's nothing on the market here. Now, people are, and the two demographics that you're seeing right now is you have the first-time home buyers that really, really, really want to get into a house. They've been renting. They're tired of walking through the hallway and smelling garbage and fish smells and whatever. You guys, I'm sure you know what I'm talking about. When you live in an apartment, you get nice smells from all the neighbors. And then you have the downsizers, where they are only focused on no stairs. I met with somebody yesterday. Again, the whole topic of discussion. They have a 4,400 square foot home. They want to have 0 stairs. They're like, no stairs. That's our whole point. That's what we want. So you're finding the downsizers, the one-level livers that want to be in one-level homes, and you're seeing the first-time home buyers. The people in the middle, the second, the third, the fourth-time home buyers aren't moving unless they have to or they specifically want to for a very big reason. Nobody's waking up anymore and saying, oh, I'm going to move today. No, they're waking up and moving because they have to or they feel like they need to, right? So people who bought a house in 2019, 2020, 21, 22, their interest rate is super low. Their payments are low, right? And they've seen wage increase over the last 4 years. However, if they were to go buy that same home with the current mortgage rates and the current, time frame, my whole point to wrap around to inflation has continued to tick up. Wage has not increased with it. And now it costs 35 to 40% of your monthly budget to pay for a mortgage versus 25 to 30. So you're basically making more money with less buying power, right? So if you're made $100,000 in 22, you make $140 now. If you were to get a mortgage, it's still going to feel like you're making less than $100,000 a year because things have gotten so significantly more expensive over the last 4 years. And that's what a lot of people are neglecting to pay attention to, right? Because everybody's paying attention to the numbers like inflation's up or, interest rates, are they going to come down? Or, what's the liquidity? What's the stock market doing? But nobody really talks about what happens with inflation and how it directly affects the day-to-day American. That's the whole reason that cash flow is so important, though, right? Because if you're continuously having non, I shouldn't say residual income, right? To me, there's no such thing as just setting money and forgetting about it and making money, right? You have to have some sort of hand on it, whether it's financial advisor and dividend stocks, or it's, I don't know, or you're putting money into like a rental property. You still have to touch base with, best case scenario, you have a property manager and they handle that, whatever. But there's no such thing as just setting money and forgetting it, right? And right now, you have to learn how to create cash flow in order to continue to move forward and make money in this world. And with interest rates continuously going up, or at least staying pretty stable around 6%, a lot of people are feeling it, not just with houses, but cars. I mean, you used to be able to buy a car for a 5-year payment for $400 a month, and now it's $700 to $800 a month for an 7-year payment, right? Like, things are continuously going up. $100,000 for a Cadillac SUV that I saw down the street is a brand new one. Granted, I'm not buying that, but people are paying $100,000. Their mortgage payments used to be $1,700. Their car payments are now $1,200 to $1,500. So, like, you see a very big different world right now where, yes, you're making more money. You probably are getting 140 on paper, $150,000 a year, but it doesn't feel like it. It feels like you're still making $80,000 a year. You're doing okay. You're not struggling, but you're still living paycheck to paycheck, and you're still feeling like everything's expensive and you don't have a lot of money left over. And that's what inflation does, right? It slightly, quietly takes away from you being able to afford things, and slowly, right? That's why you have to beat inflation. That's the whole point, right? So that's why when you get into when I look at investments, am I beating inflation? That's again why new construction, build to rents work best for me, because I'm beating inflation with equity growth, cash flow, and now my money, I feel safer in hard assets than I would in the stock market. So again, it's all about personal perspective. But if you're trying to beat inflation, you need to understand that you have to make more than what inflation currently is coming in at. So if inflation's at 4%, 4.5%, you need to be making a return of 5% or more to break even or slightly cash flow. And that's not something that you see very often, especially in rental properties. I used to look for the over-under duplexes quite frequently. I don't pay attention to those anymore, because for me, there's no equity growth in there. You might cash flow. It's even hard to cash flow now unless you're putting 30% down. And respectfully, I'm not putting 30% down in a house that's 100 years old. There's just a lot of maintenance that's going to go into it. It's not worth it to me. I have a friend of mine who has he sold a bunch of his his duplexes that he has now, and he's looking to put his money into new construction stuff because, dude, he was going out at 2, 3 o'clock in the morning. He was snaking lines because old pipes. You have roots that grow through them. It clogs it up. You have people that those homes just don't have the value. They were $225,000 10 years ago. They're $250,000 this year. Like, it's not a huge gain. Like, you might see cash flow or a slight cash flow. A friend of mine, he buys a bunch of them and he loves them because he gets cash flow from them. I want equity growth. I want to plug and play and sit back and relax. So anyways, that's a little bit of my rant. Now, we have a couple minutes left. We're going to talk about the SpaceX IPO coming out tomorrow. This is where a lot of people are going to lose money. And I'm going to be upfront and honest about this one. Just like Apple and other IPOs that were overhyped at the time, they are going to be useful over the next 10 years. They're going to be very useful. But the opening bell, well, let's just talk about it, right? The SpaceX IPO has been drawn more than $70 billion worth of retail orders. $70 billion of retail orders. Now, pay attention to that. SpaceX is raising $75 billion, making retail interest alone enough to nearly fill the entire sale. To put this into perspective, the previous record IPO was Saudi Aramco in 2020 at $29.4 billion. This means that the retail interest in SpaceX is now 2.4 times larger than the total amount raised in the previous largest IPO in history. As a result, SpaceX has announced 20% of the IPO will be allocated to retail investors, following through Elon Musk's vision to democratize the record IPO. Nothing even remotely near the SpaceX is about to do ever happen. Friday will be a historic day. This is where I think that a lot of people are going to lose money. They're going to come in and they're going to say, well, Elon Musk is trying to make everybody rich, and nobody's going to sell. They're going to get in, the market's going to absolutely tear, and then it's going to fall off a cliff, because that's what IPOs do. The retail investors hold the bag because there's all hype. How do IPOs work? Let's explain that real quick. Behind the scenes, you have a company that wants to go into the stock market. They create an IPO. And retail investors cannot touch them, right? You have You have accredited investors and you have insiders in the company. They get major portions of the company at a discounted price because they're investing into a company before it is stock market, right? Because there is risk involved in that. Because if it opens on the IPO opens on the stock market and there's no interest in it, then the market crashes and then the insider investors lose money. But with a company like this, you have SpaceX that is very overhyped by one of the most well-known people in the entire world, and to his favor, he is a big advocate of helping the middle class. But the thing is everybody's going to put their money in here. $70 billion in retail money. To me, it feels like a casino. And even if it levels out quickly, I mean, I hope that's the case. But IPOs have told us a different story. The market's going to absolutely rip for the first day, couple days, and then it's going to, like a roller coaster, it's going to get to the top, and it's going to go right over the top. And insiders and accredited investors are going to sell for their profit because they're going to be up significantly. They're going to take their massive profits and funnel their money elsewhere. And retail investors are going to sit there posting on Twitter saying, just a pullback. It's just a pullback. It's just a pullback. And then it'll absolutely rip down. That's what we need to be paying attention to. So I could be 100% wrong about SpaceX. I don't know. But, when something is hyped this much, it always makes me nervous because I get it. We want to make money. We want to feel like the billionaires and trillionaires are here to help us, but they are doing what's best for their company, not what's best for you, not what's best for me. And that's why it's our responsibility to understand what that means. So we'll find out tomorrow morning what's going on. I'll jump on as soon as the market opens tomorrow. We'll do a video for you. I hope you have a great day. Much love. We'll see you soon.